Hello, I'm Sam Stovall, Managing Director, U.S. Equity Strategy. In this week's IPC Notes, found on www.getmarketscope.com, I discussed whether the market's unrelenting advance will continue. The bears have a greater number of talking points to support their cautious approach, but the bulls simply need to remind us not to fight the tape. In the past 13 weeks, the S&P 500 has risen nearly 5%, and all of its 10 sectors are in positive territory. What's more, 80% of its sub-industries are above their 10-week moving averages, and 85% are above their 40-week averages. But momentum alone doesn't justify further gains, especially since the S&P 500 is priced to perfection in our opinion, and recent economic data hint at softening economic growth rather than a likely acceleration of forecasts. So while we wouldn't trim our equity exposure, we also wouldn't surrender to the siren song by increasing our holdings. From a technical perspective, the S&P 500 remains in an uptrend within an ascending trend channel that has been in force over the last few years. The top of the channel, which is an ever-rising resistance target, is currently near 1975. Support is at 1838 to 1876 on any pullback, and there is prior support at 1814 and 1738, as well as the bottom of the ascending trend channel. Separately, gold has retreated from the zone of resistance where we expected selling pressure to reemerge. A price decline below 1258 would be bearish in our view and would suggest a substantial leg lower. I'm Sam Stovall, and I'll talk with you again next week.